In business today, three things to know. First, the summer is lighting up consumers. Consumer sentiment rises as Americans think the economy is on the right path. Then, call it Walmart Nation. The giant retailer is getting into more businesses than ever. You can now buy caskets from Walmart. Who wins and who loses as big box stores roll into town? And the king of cash. We'll speak with the author of Michael Jackson, Inc., about the rise and fall of a billion-dollar music empire and its eccentric leader. Arise Exchange starts now. Hello, everyone. I'm Andrew Schmertz. With summer and warmer weather here, consumers are feeling pretty good about things. The monthly Consumer Sentiment Index from Thomson Reuters and the University of Michigan rose slightly more than expected to 82.5. Anything above 80 is considered positive. That number is considered key because consumer spending makes up a majority of the U.S. economy. In a moment, we'll speak with Brit Beemer about how consumer sentiment could translate into retail sales and that impact on the GDP growth for the quarter. Meantime, stocks ended mildly up Friday as traders started to close the book on the second quarter, which ends on Monday. Here's a look at the final numbers. Dow Jones Industrial Average squeaking a positive gain, up 571 to 16,851. The S&P 500 up 3 1/4, and the Nasdaq up 1888 to 4397. 93. Some of the top stocks we're watching today: footwear and athletic apparel giant Nike says its quarterly earnings and revenues topped analyst expectations. The company reporting net income rose to $698 million, or 78 cents a share. Nike closing at $77.68. Chemical company DuPont cutting its earnings forecast for the year over year after sales of corn seed went down. The company's biggest agricultural product, DuPont, closed at $65.44. And shares of action camera maker GoPro continue to soar today after making its market debut yesterday. GoPro closing up another 15%. That's on top of the 30% from yesterday to $35.92. Commodities: gold closing at $13.17 and oil closing at $105.75 an ounce. That's down 9 cents. America's Research Group President Brit Beemer now joins us from Orlando. We'll talk about retail sales and the growing nation of Walmart. Brit, welcome back to Arise Exchange. Glad to have you.
Andrew, thank you for having me back. Thank you.
I want to ask you first about consumer sentiment. What is sort of driving the positive numbers? Because there's so much out there that should just be weighing on them. You have the situation in Iraq. You have kind of the drib and drab of poor gross domestic product numbers.
Right. Well, Andrew, keep in mind, one thing you see happen, and usually in June, I always recall this the summer vacation effect. There's a lot of consumers in June that feel better because it's the one time when they get all their family back together, of those people that have children away from college, away from home. And you see oftentimes a 3 or 4 uptick at that point alone. Also, keep in mind, there's not been any major layoffs, announcements by any big companies, which adds a little bit of more job security. But I would say those two things combined, but there's something else out there, and that is that today only about 12.5% of consumers say that debt is a big problem.
That debt is a big problem.
That's an 8-year low on that point, which is probably another reason why they feel a bit better.
Are they cutting debt, or do they just kind of feel better?
Well, they're cutting debt. You know, if you look at for 7 years ago, when we started seeing these changes with consumer attitudes on spending and saving, what happened was 7 years ago, consumers started taking their income tax refund checks, and over 5 years, pretty much got their debt level under control. And in the last two, they tried to lower it even more. So people did not have the debt problems facing them that they had before, and that's one thing consumers say. And that's why 71% of consumers say they will not use credit cards or go back into debt because they're afraid of getting those calls again.
How does the consumer sentiment numbers then translate into people actually going shopping? There has to be a connection between answering a survey question, hey, I feel pretty good, and going and buying things. And what are they buying?
You know, I would tell you, first of all, there's probably only about a 55% correlation that one fits the other at any one time. And here's what I'll give you an interesting point that no one talks about. May sales were not very good, yet Memorial Day shopping levels were up almost 19% over last year. But Memorial Day spending levels were only up 3%. So there was a 16-point differential of the number of consumers that actually shopped versus how much they spent. So it just tells you how much more bargain-driven they are. And I think, Andrew, the point I want to add to this is that, and you're talking about it in a minute, but I want to think about this. 18% of consumers regularly buy on the internet. 21% of consumers regularly go to a mall or shop a mall. 77% of Americans walk into Walmart and buy something every month.
Yeah, let's talk about Walmart for a moment. Their numbers have been a little bit soft in recent months, but you just said an incredible statistic that people buying Walmart are going into the stores and not buying online. We have a couple of graphics that I want to put up about Walmart. First, how big the company is. The company has approximately, if we have the Walmart graphics, thank you, 4,200 stores, another 6,000 overseas, more than 11,000 stores. And then if you look at Walmart, what Walmart is selling today, this really may surprise people. Basically, Walmart wants to be the one-stop shopping for your entire life. There's a few names on the list there. They're selling caskets. They're selling guns. They're selling engagement rings. I guess you can buy an engagement ring, your gun, and prepare for death all at once. The service is life insurance, credit cards, pharmacy. How is Walmart driving all of these products to consumers?
Well, what's happening is they just simply live off the amount of traffic in their stores. You know, one of the things that, Andrew, I look at is how many times people visit a store. You know, when Walmart was just a discount store, consumers were walking in their stores 3.8 times a month to shop. When they added groceries, that number doubled to 8.8. So all of a sudden, they have this consumer that walks in their store and buys something almost 2 times a week in many cases. And then you've got the other fact that consumers who walk in there and buy things, so many things are bought on impulse. And that's one reason why Walmart hurt themselves when they went back and they dropped all those bargain tables years ago. People would walk in with ideas to buy something, and they would buy 2 other items. When those bargain tables went away, they lost those extra purchases.
Yeah, and because I heard that's how people bought like TVs from Walmart. They went in looking for something else and then saw these great deals on televisions. You know, it's a little bit of a paradox of Walmart. On one hand, Americans love Walmart because of the prices, and you can go in there and buy anything. On the other hand, you know, they don't like some of the company's policies, what they pay people, their anti-union efforts in some case, and more importantly to some, how they roll into neighborhoods and crush the competition.
Right. Well, keep in mind one thing, and you missed one thing. What makes Walmart so unique, though, they have the most liberal return policy besides Nordstrom's in the country.
That's interesting.
So consumers may not like something, but if they buy something there and they don't like it, they can take it back. The problem with the competitors is, Andrew, is that competitors seldom compete against Walmart in the way they should be competing. You know, if I owned a retail store and I was competing against Walmart, if I owned the company, I'd be out in the store every single day. The one thing Walmart cannot do is they can't put Sam Walton and bring him back from the dead and put him in all the stores.
Sam Walton,
if I were a retailer, I would be out in front. I'd be talking to customers. I'd be thanking customers. You know, I have a client that's in a very small market who has a few stores across from Walmart. And this company that he owns, every night when he comes home for 2 hours, he calls people that bought something in his store a month earlier to thank him for taking time coming to buy them. Do you realize he's never had a negative year, even during the recession, because he called every customer a month later to thank him? That's pretty simple, but most retailers never do that.
And Walmart certainly can't do that. And you know, there's also sort of this issue about how they deal with businesses, because if you're a small business, you want your products in Walmart, but they drive down the margins a lot. And at some point, are we starting to see some sort of anti-Walmart effect as far as their bottom line goes? Because they have been reporting some softer sales.
Well, the trouble, Andrew, that Walmart has is they've allowed groceries to become half their volume.
That's interesting.
And as you know, the grocery industry has virtually zero growth every year. You're talking about 0.8, 1.2% growth. When you got that kind of level of volume in that category with no growth, you're in trouble. So what happens now is, you know, for example, you know, I think Apple has had to let Walmart run these phones at a low price because if Apple would have pulled their brand before. So now they're running lower prices on Apple products. But that's only going to be a short while because, I think what we're going to see is Apple's going to bring out that new phone, and all of a sudden, the iPhone 5 will be passé.
Yeah, I never thought Apple and Walmart was a good fit because Apple sort of had this, we're just going to charge you what we're going to charge you sort of attitude. So it's interesting. Brit Beemer from Orlando, thank you so much. We'll talk to you soon.
Andrew, thank you.
Coming up, why a dock workers dispute could cost the economy billions. You're watching Arise Exchange.
I think news does make people put things in black and white terms just so that they have a dividing line between what their viewers like and dislike.
When they see a person of color, they either think that they're not going to do anything, they're either on drugs, or they got pregnant at an early age. And I just want to say that that's not true.
It tends to reflect more the interests of the upper income people and the upper income interests.
Arise News, every culture, every angle.
Welcome back to Arise Exchange. The contract that covers nearly 20,000 West Coast dock workers is set to expire on Monday. If there's a strike, industry officials are warning of a significant disruption that could cost the U.S. economy billions. That's because West Coast ports are America's gateway for trade with Asia and beyond, handling 44% of container cargo coming into and out of the country. To talk more about the contract negotiations and the potential impact of a strike is Jonathan Gold. He's Vice President of Supply Chain and Customs Policy at the National Retail Federation, and he joins us on the phone from Washington, D.C. Jonathan, welcome to Arise Exchange. This is sort of a complicated issue that many people may not be so aware of. So walk us through what this dispute is about.
Andrew, thank you very much for the opportunity to join the program today. Essentially what the issue is that you have a contract negotiation between the Pacific Maritime Association, and who is the management group, and the International Longshore and Warehouse Union, which are the dock workers. This is a debate about a new contract between the two parties. The last contract was done in 2008, so they're now in negotiations for a new contract. And that contract currently is set to expire on Monday, June 30th.
And in 2008, we went down this road before, didn't we, with a strike?
Well, no. In 2008, we had some slowdowns, but in 2002 was when we had the last major disruption on the West Coast, and we had a 10-day lockout that, by some estimates, cost the economy about $1 billion a day and took close to 6 months to fully recover from.
So tell us a little bit about what these ports do, because they really are the gateway, as we just said, to how all of these products get into the United States. And we import and export so much to Asia and to the West.
Correct. The ports really are the critical linchpin in the global supply chain. It provides the opportunity for businesses to both import and export products. For the retailers who I represent, it's the ability for them to bring in their goods from Asia through the West Coast to get to all of their stores. But it's also critical for manufacturers who are relying on imports of inputs to production to go to their production facilities, but also export to go to the Asian markets, for agricultural producers who are sending their goods overseas. Without the ports, those goods don't move either in or out of the country.
And the numbers are pretty big here. According to a report from the University of Maryland, there's 405,000 workers who could be affected in a 20-day shutdown, close to $50 billion impact on the U.S. economy, which would certainly hit the gross domestic product. Now, what are you telling the workers that you want to see from them? And how far apart do you think that the two sides are in resolving this?
From our perspective, and for all the businesses that are keeping an eye on the labor negotiations, our perspective for both management and labor is for the two sides just to stay at the table, continue to negotiate, and get a deal done as soon as possible. We just wanted to highlight the potential impact that any disruption could cause and cost the U.S. economy, whether it's a slowdown and strike by the union or a lockout like we saw in 2002 by management. There's a lot at stake here for the U.S. economy. We're still going through the recovery from the recession from 2008. Any kind of blip would really hurt that continuing recovery.
The last walkout in 2002, then President Bush used what's known as the Taft-Hartley Act to force the workers back to work. Have you heard at all from the Obama administration? Does the president have a plan to step in?
We have not heard as of yet. Our hope is that this does not come down to that, and that the two parties will be able to get a deal without any disruptions or interruptions in the supply chain. But we do know that the administration and other officials are keeping an eye and watching what's happening with the negotiations.
Okay, so the strike deadline is next week. Any predictions on where this is going to go?
Well, the contract deadline is the 30th. Our hope, again, is that the two parties do remain at the table and continue to negotiate. It's that uncertainty that's really impacting a lot of businesses, because you have a lot of businesses that aren't waiting around to see whether or not a disruption is going to happen. They've already put in place their contingency plans, where they're either bringing product in early or shifting and going to alternate ports like the East Coast or Canada and Mexico.
And all of that would cost them, I take it, much more money.
that's correct.
Okay, Jonathan Gold, Vice President of Supply Chain and Customs Policy at the National Retail Federation. Thank you so much for explaining that to us.
Thank you very much, Andrew.
Time now for our business ticker, stories making headlines across the nation. Lenders are pursuing high-risk credit card borrowers more aggressively than they have since the financial crisis, according to data provided to the Wall Street Journal by the credit bureau Equifax. Banks and other lenders issued 3.7 million credit cards to so-called subprime borrowers in the first quarter in an attempt to boost revenue. That's a 39% jump from a year ago and the most since 2008. Ukraine signed a sweeping economic and trade agreement with the European Union, the deal that started it all with Russia and Crimea. The agreement will allow the country to trade freely in any of the EU's 28 member nations without tariff or restrictions. It's expected to boost Ukraine's national income by around $1.6 billion a year. However, the pact was signed over the protest by its neighbor Russia, which, of course, has warned of possible trade sanctions. Alibaba, China's online retail giant, will go public on the big board. The e-commerce company has chosen to list its shares on the New York Stock Exchange over the NASDAQ in what may be the biggest initial public offering ever. Analysts predicting the company could raise more than $20 billion. Alibaba will be listed under the stock symbol BABA and will start trading in mid-August. Good stock symbol. The World Cup match between the United States and Germany created pizza shortages around the country. USA Today reporting that Pizza Hut sales were up more than 50% for a normal Thursday at its 6,300 outlets. And according to Papa John's in Chicago, it also had a flood of customers. The next game for Team USA is scheduled for Tuesday against Belgium, so you may want to get in your pizza orders early. Right now, we're in the final hour of the first ever federal auction of Bitcoins. Yes, the federal government is auctioning off Bitcoins. This morning, the U.S. Marshal Service started auctioning off 30,000 Bitcoins, estimated to be worth $17.5 million. The digital currency was seized from the now defunct black market website Silkwood, which the government shut down back in October. Here to discuss what all of this means is our resident Bitcoin expert, Max Raskin. Max, welcome back to Arise Exchange. So where did they get the Bitcoins, and what are they doing with them?
So they seized them just like you would seize any drug traffickers, Ferrari or anything like that. They seized it from his name's Russ Ulbricht, the guy who ran
Silk Road.
The Silk Road website.
Silkwood. It's not Karen Silkwood.
Yeah,
it's Silk Road.
who ran the Silk Road website. And they seized about $30,000 of 30,000 Bitcoins, which...
Does this make them... I heard somewhere they're one of the largest holders of Bitcoins now in the world.
Yeah, so now the U.S. government is it looks like they're one of the largest holders. I mean, it's hard to tell because of the anonymous or the pseudo-anonymous nature, but in terms of, this is a substantial...
Does this sort of lend legitimacy to this currency that the U.S. government and people in Congress said we're supposed to regulate Bitcoins, we're supposed to outlaw Bitcoins, and now the Treasury is going to make a boatload of money from it?
Yeah, so what supporters of Bitcoin are saying is that when you seize a drug dealer's cocaine money, you don't auction off the cocaine. You auction off the Ferrari and whatnot, and so here the fact that they're auctioning off the Bitcoins means that they don't view it like cocaine as a black market good.
So how is this auction going to go, and who's kind of interested in buying it? Is it a transparent auction, or is it like in Bitcoin world where it's all anonymous and no one knows what's going on?
So it's going to be a sealed bid. A bunch of bidders, financial institutions and venture capital people are putting in their bids for these 3,000 Bitcoin blocks. And so people are going to be emailing their bids or are in the process of emailing their bids to the market.
But isn't there a Bitcoin, why couldn't the government use one of the Bitcoin exchanges?
Yeah, so they could sell it on the exchange, but given the fact that this would be like a large dump of liquidity, it would probably very negatively impact the price, or there would be a lot more volatility than doing it this way.
Okay, so we've been tracking the price of Bitcoins for some time now, and it is very volatile because it's thinly traded. Mm-hmm. Where are we right now in the value of Bitcoins, and is the U.S. government sort of timing this correctly or incorrectly, in your opinion?
Well, so what's interesting is that the price hasn't really fluctuated all that much in the past week or so, although this was announced about a month ago. But right now we're at about $585 for one Bitcoin, and the U.S. government is timed it in a kind of low volatility. So, we'll see what happens.
What does it say about Bitcoins in general that one of the largest stash of Bitcoins was being held by a rogue website, in essence, that was accused of money laundering, of drug dealing, of maybe even ordering or arranging, hits on people?
Well, so it is a large amount of Bitcoins. It's 30,000, but there are about 12 million Bitcoins in existence. So it's a relatively small fraction of the economy. And what people estimate is the cash economy has about 11 or 13% used for drugs in U.S. dollars.
I get the sense, and you could correct me if I'm wrong, but the momentum towards Bitcoin acceptance has slowed down a little bit. At least from a media perspective, I don't see as many stories about Bitcoin. I don't see as many announcements from companies taking Bitcoins. Is that an inaccurate statement, do you think?
Well, I mean, so you had Dish and you had Expedia in the past 2 weeks say that they were accepting it. But, there needs to be some kind of killer app, or there needs to be something that really drives
another cycle. And maybe a little
cycle.
Regulation, do you think?
Yeah, there will be a little regulation. They're waiting to see Ben Lawsky, who's the head regulator of the New York Department of Financial Services. He's going to be issuing his regulations to hopefully open up a Bitcoin exchange in New York, because the only ones that exist now are in Slovenia and were in Japan.
That's right. Okay, Max Raskin, thank you so much.
You're welcome.
Good explanations on Bitcoin. Ahead, a nanny that just won't go, literally, is our favorite person of the day here on Arise Exchange.
One of the great things about Arise News, it is truly a multicultural global channel that is paying attention to communities of all different kinds, not just here in the United States, not just in Africa, but all around the world, as we're giving a voice to the people that don't traditionally have the kind of a voice that a mass media organization can have. You're getting here at Arise News that you're not going to find at the other networks is a unique perspective, and I think that's part of what Arise is here to do.
One of the great things about Arise Entertainment 360 is we have this Arise to Your Health segment, which really focuses on the holistic approach of being healthy. So we do everything from working out to juicing to getting in shape by doing fun exercises like bouncing on a trampoline or wearing these bouncy boots on our feet when we're jumping all over the set. We've done karate, we've danced the weight off, we've done just about everything. And of course, I love when we eat on set, but we do it in a very healthy and clean way.
Time now for our favorite person of the day, when we pick one person who grabbed our attention and not for the right reasons. Today, it is a nanny who refused to leave when she was fired. A couple in Southern California hired Diane Stredden from an ad on Craigslist as their nanny to watch over their kids. Their first mistake using Craigslist. Initially, Marcella and Ralph Bracamonte said Stredden was a good nanny. But then after a couple of months, they claimed she stopped working. So they fired her and demanded she leave their Upland, California home. The 64-year-old ex-nanny, though, refused to go. The couple then tried to evict her, but a judge says they did not follow proper procedures and the nanny could stay. Only in California, folks. Now, months later, she comes and goes as she pleases and even eats the family food. The couple has hired an attorney who served Stredden with the proper legal papers this time, and they hope she leaves soon. And so Diane Stredden, nanny nightmare, is our favorite person of the day. Coming up, moonwalking to billions, how Michael Jackson built an empire second to none and then nearly lost it all before his death. You're watching Arise Exchange. It's Friday, everyone. That means it's 5 o'clock somewhere.
Looking at mainstream news stations where only you have a very small minority of people of color being newscasters and actually having prominent roles in the media.
In a newsroom in the United States, maybe 10% of decision makers come from communities of diversity. That's not right.
Well, diversity is important because the more complete the news is, the more accurate a picture you're getting of the world, and the more you can form an accurate opinion of things.
The vision here is not just to tell the main stories of the day, but to tell the news that other organizations don't tell, and tell it in a way that people like me, people that look like me, that look like you, are interested in.
Arise News.
Arise News.
Arise News.
Arise News.
Arise News, every culture, every angle.
Since Michael Jackson's death 5 years ago, his estate has generated more than $700 million. Like many dead stars, he does pretty well after he's gone. He is considered by many to be the greatest entertainer of all time. At the same time, he was a revolutionary entrepreneur. This is more than any single living musician earned over the same period of time. Even though he made more than $1 billion during his career, he died in millions of dollars in debt. Zack Greenburg, he's the author of Michael Jackson, Inc. and senior editor at Forbes, here to tell us a little bit more about the business of Michael Jackson. Zack, welcome to Arise Exchange. You know, you opened the book with an interesting story about how he's negotiating for the Beatles catalog. Tell us about that story, because it says a lot about somebody you did not necessarily think was necessarily business savvy.
Exactly, and that's why I opened the book with it. You know, basically what happened was throughout the 80s, Michael Jackson's pulling in all this money, over $100 million a year adjusted for inflation, $247 million inflation adjusted in 1988 alone. And basically his advisors said, you got to park that money somewhere and not just have it sitting in cash. And he wasn't really that excited by real estate or mutual funds or so forth. He wanted to invest in things that he knew. And did he ever know music? So they brought him a deal, the Beatles catalog, which was available for, ended up being $47.5 million.
And all of his advisors were telling him this was way too overpriced. David Geffen said, don't buy it.
And he said, he listened to everybody, and then he wrote a note to his lawyer, John Branca, who's now the co-executor of his estate. And he said, John, please let's not bargain. And then in all caps, he wrote, it's my catalog.
Meaning he wanted
and he won it.
And it went for sale a few years later for about $1 billion.
Well, he never actually sold it. That's the great part. He was able to enter into a joint venture with Sony. In 1995, he got paid $115 million just to do that joint venture, got half of the new entity, and that half is now worth about $1 billion. So.
Okay, all right. So this is an individual who, you know, we saw all the tabloid stories about his life, and we certainly are familiar with his music, but there are so many things that he revolutionized and changed. And a good example of this is the power of music videos.
For sure. And when you look at the music video landscape before Michael Jackson, it looks nothing like what we have today. First of all, there were basically no black artists on music TV. I mean, MTV only played white rock music. And with Michael Jackson, Billie Jean, and then Beat It and Thriller, suddenly, you know, the doors open, and it's not just, you know, a door opening to cultural diversity in the music video, but also just the way music videos are approached by everyone became totally different.
How influential was he in the African-American side of the music industry?
Yeah, I mean, you know, I think he played a key role in many ways, sort of like the Jackie Robinson of pop, you know, in opening doors, because in the past, you know, African-American music had been kind of ghettoized into R&B and soul and so forth. And, you know, it was really with Michael Jackson that the idea of pop became kind of a pan-cultural idea.
So where did things sort of go wrong here for him? Was it the buying of the big estate? Was it that he just lost focus? Was he, you know, did he just go crazy?
There were a couple things. I mean, certainly '93, the child molestation allegations you know, that hurt. Obviously, that made him quite distraught emotionally, but also financially. It made it very difficult for companies to want to partner with him, brands to want to work on deals with him. You know, but I think that another thing that people don't really think about as much is the impact of Thriller. And when you make the greatest album of all time, the most best-selling album of all time,
where do you go
how do you top that? Yeah, and every successive album, he tried a little harder and spent more time and money to do it. And
so did he fail at diversifying his empire then? Was it just too much Michael Jackson brand and not enough about diversifying elsewhere?
I think that after '93, it became almost impossible for him to diversify in the way that he had started to, which was by doing shoe deals and clothing lines and so forth. Things that guys like Jay-Z and Diddy do now, Michael Jackson's doing 10 years, 15 years before, but he couldn't do that when the reputation took that hit.
And we have about 40 seconds left, but I imagine his family and everything we hear about that was a big drag on his finances.
For sure. There were a lot of hands in the pot, a lot of advisors telling him conflicting things. It was kind of a merry-go-round, and you know, a lot of people kind of trying to get on that golden goose.
Had he lived, would he have turned it around, or would he be broke, do you think?
I think, you know, it all depends on that tour. If he could have made that tour happen, generated all that money, I think he could have turned it around.
And right now, how is the estate being managed?
very well. You know, like you said, $700 million in 5 years. Hard to complain about that, I think.
Okay. Zack Greenburg, the book is Michael Jackson, Inc., The Rise and Fall and Rebirth of a Billion-Dollar Empire. Thank you so much for coming.
Thank you.
Interesting talk. Next week on Arise Exchange, the co-founder of Essence Communications and Essence Magazine, Edward Lewis, stops by to talk about the power of a brand. Let's take a look at the final numbers on Wall Street for the week. The Dow Jones Industrial Average, S&P 500, NASDAQ all closing up. I'm Andrew Schmertz. Have a nice weekend, everyone. Thanks for watching.